The markets were extremely volatile today. A 1,000 plus point swing is certainly not normal. The PPT was out in full force, and it could be similar to the actions of December 2018. Treasury Secretary Munchkin had made some phone calls, and the markets rose from that point on, gaining 30% afterwards. Recently, we've wiped out nearly all of those gains, but the point remains. Market interference is powerful and definitely convoluted. We must dig to find the answers. You came here for the truth, so let me unveil that for you. Today we're going to look at what's going on. There's some big details that did not make it into the mainstream, that most people simply skipped over, or it wasn't brought to the front, so obviously they're not going to see it, they're not going to talk about it, it's not going to be shared online, it's not going to be shared in between investors. I've got the details for you. Let's begin with the markets themselves. An incredible day today for stock investors. We saw the Dow Jones going up nearly 1,200 points. S&P is back up over 2,800. You can see it at 2882 right now as of this recording. Take a look at the end of the day. 2 p.m. we saw it rise afterwards. Classic PPT movement. But again, we don't know exactly what's going on. We don't have any of those details. The point remains that we see this all the time. 2 p.m. and onward, markets go up. This is very typical. And of course, we need to understand why. Why exactly did this move? Take a look. You could see the fiscal stimulus. According to CNBC, that's the reason why the markets moved. Markets are moving on the hopes of fiscal stimulus. Airlines, cruise ship operators, and even oil companies rose on talk of government assistance. Now, you know right now what we are seeing, what we are looking at, these details. It's so instrumental to everything that's been happening. When you see the global economic slowdown, and you pile on top of that the big C, you know what I'm talking about? The airlines are getting decimated right now. They're getting destroyed. And you think a little bit of fiscal stimulus is going to save them? This is crazy. But I saw some of these airlines going up by 15%, 17%. It was unbelievable. But this is the way it works. We don't need real fundamental analysis anymore. What we need is stimulus, fake fiat garbage. Not only do we hit limits on the way down, but apparently on the way up too. But the treasuries in this case, you could see that on March 9th, they hit the limit on the way up and the limit on the way down on March 10th. It's been crazy to see how aggressive the moves have been. Really quickly, the current sell-off has had a similar magnitude of peak global equity volatility to the 2011 event and far less than the global financial crisis. Depends how you're looking at this, of course. There are many different statistics we can break this down with, but I just want to show you 2011, you had a debt downgrade of the United States, and then that led into the Euro sovereign debt crisis. There was a bunch of issues, actually. This just shows you some details. The chart is broken down here. Essentially, it is very high volatility. Not quite to the Lehman Brothers level, but understand where we're at. That's all I'm trying to do. All right, check this out. Coming out of Fox Business, Treasury Secretary Munchkin and Federal Reserve Chairman Jerome Powell continue to speak daily amid the extreme market swoons, which continued this week. Separately, the two participated in a call for the President's Working Group on Financial Markets, also known as the PPT. That's just the name that's given to it. That includes Vice Chair Randall Quarles, Federal Reserve Bank of New York President John Williams, the SEC Chairman, the CFTC Chairman, the Comptroller of the Currency, and the FDIC Chairman. So all of the people, the biggest positions around, all the heads of these different pieces involved, they are all on these phone calls. They know exactly what's going on. They know when to flip the switches. They know when to hit those triggers. And according to the Treasury Department, the group discussed the recent extreme volatility and the resiliency of the financial markets. Similar activities took place back in December, right at the end. I think it was December 24th in 2018, and we saw exactly what occurred afterwards. The market loved it. The market responded very, very well to that stimulus, and they went up and up and up. In fact, the markets gained approximately 30% back in 2019. It was that moment in which the market seemed to be ignoring all of that news coming through the fourth quarter of 2018, and it lasted quite a while. Now, this here just shows you how they can have an impact on the markets directly, even though nothing's been done, even though nothing's been assured. The markets love it anyway. This is just showing you basically the same thing, but it's coming out of Bloomberg. Treasury convenes meeting with the Fed, SEC to discuss what's happening, this big issue going on. According to the Treasury Department, the regulators shared updates on the resilience of the markets and the economic impact. I just wanted to get that quote for you to make sure you know exactly what's happening in different sources of that information. Well, here we go. The Fed repo operations not only continue, but they've expanded into a territory we have never seen before. I'm going to scroll down here and zoom in to give you a closer look at this. I wanted you to see, because we got the overnight operations, we got the term repo operations, and it is extreme. Now, just to give you a quick overview of what we're looking at here, you need to understand that there are two separate things happening. You could see this one here says 14 days. Those are the term repo operations. The maximum right now, even though they have already expanded it, is $45 billion. All right. So they brought this down. I think it was initially at 25 or something, and they brought it down to 20. Now it's at 45. At the top, we're looking at the overnight operations. You could see how they're 1 day in terms of their terms. This has been moved all over the place. It was 120, it was 100, and now it's up to 150 for the maximum. And check this out. Today, they've actually hit 123.6. That's the highest that it's ever been before. It didn't hit the ceiling, but it looks like it's going in that direction because there is such demand right now. For the term repo operations, they actually submitted $93 billion worth. They hit that ceiling, oversubscribed significantly. Of course, only allowed to have 45 billion. I'm sure they're going to have to expand this. They've always said, look, this is short term, just 1 day. You don't have to worry about it. I received many hate comments throughout the period, September 17th and onward, saying what you are looking at is not true. You're trying to bring people false information and so on. Then they brought the term repo operations. Still got those same comments, even though it was longer dated maturities. Okay, fine. Then they started the unofficial QE4. That wasn't enough either, even though they were expanding their balance sheet to $60 billion a month. Okay, we'll just ignore all of that information. Soon they will get into even longer dated debt. They have to. This is the way it is. They're going to have to expand it further and further and further. They're not the only central bank doing that, and I'll give you some more details about that in a moment. Here you can see the term repo operations, how massively oversubscribed they have been. This is the overnight repo funds accepted, and just look at what's going on right now. Over the past several days, there has been extremely high demand, even though this was supposed to fade away, even though they told us everything was just fine. It clearly isn't, and we are looking at something that largely people don't understand, investors don't understand, the financial companies don't understand. There's just a very few select individuals who deal with it regularly. They know what's going on. Everybody else is staying silent because they're staying ignorant. I also wanted to show you what's going on with the ECB. They've been expanding their balance sheet at record levels as well. This is just giving you an idea of where they are at. 4.7 trillion euro. 4.7 trillion euro. Understand how massive their balance sheet has become. This is basically from the beginning of the year up until now. It's been growing and growing and growing for the most part. They are adding to their balance sheet. They're going to have to increase the levels at which they print. There's no doubt about it. This is going to have to go higher and higher. And what's different about the ECB than we have with, let's say, the Federal Reserve is that the ECB has all these different programs. Whether we're talking about buying debt, they're buying all the toxic debt. They are also with the CSPP program, they're buying corporate debt. In my opinion, this is a direct bailout of the corporations that we have in the Eurozone. Imagine that. The company can go into debt, they issue their bonds, and then the ECB buys them. They print money out of thin air, they buy the debt of the corporations. This is a constant and never-ending bailout that's taking place. And do you own a corner shop, it's not doing well right now because of that big issue that's happening, the big C. Is your company going to get a bailout? Of course not. Are you going to issue debt and then the ECB is going to come around and buy it all up? No, I don't think so. That's not the way it works. It's always the mega corporations that get the money, not you. So the Prime Minister of Japan is pressuring the BOJ to ease ahead of next week's rate review. Of course they will. The government will work closely with the Bank of Japan to stabilize markets, piling pressure on the central bank to ramp up stimulus next week to fend off risks to the economy from the situation that's going on globally. Further along in this Reuters article, they've got a lot of information about what the Central Bank of Japan does, and I want you to know about this. I want this to be very clear because we always talk about the Fed. We're always looking at what's happening in the United States, but if we take a page from what's happening with Europe and Japan and all these other countries, we can get a good idea of what's coming, all right? Now, BOJ eyes more ETF buying. So think about this for a second. You've got the central bank printing money out of thin air to buy up all of the assets that are available. This is what Japan does. They have been buying over and over and over again, month after month. They've been racking up the amount of fiat currency. I mean, they're running out of ink in this country. There's no doubt about it. Paper is a hot commodity. Under a policy dubbed yield curve control, which, by the way, the Federal Reserve has talked about, the BOJ guides short-term interest at minus 0.1% and the 10-year government bond at around zero. It also buys risky assets such as ETFs to funnel money to the economy. That's not the way you funnel money to the economy, of course. That's how you help out your friends, but this is the way it works. The last time that I saw the numbers, they had purchased 80% of the ETFs in the country. I do not have new data on that, but this was it. I had seen them go from 75, 76, and then the last number I saw was 80%. That might have come down, I don't know, but let's go with that. Markets are rife with speculation that the BOJ could pledge next week to buy ETFs at a faster pace than the current commitment to do so by roughly 6 trillion yen. That's about $58 billion per year. That's a lot of money. Okay, it's not the biggest amount. It's not necessarily suggesting that they're buying all of the ETFs, but it's getting there. It's really getting to that point. We're talking about $60 billion in a year. Think about that. Sources familiar with the BOJ's thinking say that such a step is among the options the central bank is considering if they approach the ceiling as a result of aggressive purchases. They're going to do this. They're going to expand. They have to. If there are anything that is necessarily preventing them from going further, they will change laws. They will change the regulations. They will do so in a crisis. All you need is a crisis to take advantage of the situation. Kuroda told Parliament that the BOJ had a cumulative 2 trillion yen worth of ETFs. And I think by my calculations, that's $19 billion approximately. He also revealed that the BOJ's own estimate showed its holdings of ETFs may incur paper losses once the stock market falls below 19.5. It's basically there right now, and if we still continue to have the turmoil with these ups and downs, it looks like they're actually going to see losses on it. Now, they're printing fiat currency and they're losing money, but who cares, right? It's coming out of thin air anyway. Here they just talk about how they're expanding their operations already, and of course, they will make the commitment to keep doing so. That's just the way it is. Let me move on. Here you can see Japan's real GDP. This is the annualized quarter over quarter, and it shows at a minus 7%. That makes the assumption that this problem is going to extend further and further and further into the year. I'm not sure about that, but this is a big number. We're looking at extreme levels today, and it's all over the world. We can see all different industries that are being affected by the global economic slowdown and all the other issues that are piling up on top of it. All right, my friends in New Zealand, I got some information for you. I've got people all over the world that watch these videos, and I know that you're always seeking information. I try to bring you info from all over the place. This one happens to be about New Zealand, negative rates, asset purchases, and New Zealand Central Bank's toolkit. Check this out. New Zealand Central Bank would consider negative interest rates or large-scale asset purchases once its benchmark rate falls to zero. That's right, 0%. And then what are they going to do? Obviously, we go QE and into the negative. 0% is not enough. We got to go there. It didn't work for Japan. It didn't work for Europe. But hey, let's all try it. The central bank governor himself said in a speech, the Reserve Bank of New Zealand has not and still does not need to use alternative monetary policy instruments to the OCR, but it is best to be prepared. All right, check this out. Unconventional policy under consideration included forward guidance, that's senseless garbage that they always use. We're going to do this, we're going to do that. It's just them talking nonsense. Negative rates, check, and interest rate swaps. There we go. It is also considering large-scale asset purchases, thank you very much, as well as buying foreign currency assets to lower the New Zealand dollar. You, as well as everybody else, are having devaluation devalued currencies, but you don't see it. Why? Because it's valued against another devalued currency. If all of these countries are involved in QE, quantitative easing, negative interest rates, the value of these dollars or whatever it happens to be, the currency is declining over time. But what's it declining against? If all of them are going down, all spiraling downward, then what am I talking about? I'm talking about real goods, real things you have to buy. Why do you think it's so freaking expensive when you go to the store and you gotta buy your food and you're thinking, wow, this store is really expensive. I can't believe it. I remember when it used to be this price. Why is it that there used to be one person in the household, one income, being able to support a normal family? Today you got two people in the household and they're struggling to make ends meet. That's what you get when central banks go overboard. Just to give you an update on what's happening with crude oil, now at $35 a barrel for the WTI, Brent crude at 38. It has gone up considerably over the last period that I showed you yesterday, the day before. We're watching this really rise up. And why? Because everything's fine now. Don't worry about it. All those pending issues have actually gotten worse, just so we're clear. What's happening with shale, that's a big problem. What's happening with Russia and Saudi, that's actually worse. But nobody needs to know about that. Stimulus is coming. Everything is fantastic. In conjunction with that, just wanted to touch on this. Shale's new reality. Almost all wells drilled now lose money. How are they ever going to be profitable at the current prices? It's simply not possible, but of course, we're not allowed to talk about that because that's pessimistic. What is the solution to the problem we are encountering today? Well, according to these economists, giving money directly to the people fast. Cash giveaways, as one noted here. Rapid direct payments to individuals. Stimulus payments to households. There's more in this article if you want to check it out at a CBS. But is this the solution? Is helicopter money to the people raining down upon them the solution to this problem? I want you to discuss, first of all, what exactly is the issue? Is there a global economic slowdown happening here? Or is this simply a bump in the road? Why are you going to give money at all? Why are you doing QE? Why are you trying to support the markets if everything is fine? You told us just a few months ago, everything is fine. What has changed? First define what has changed, and then you can go up ahead with certain actions. Do I think that giving stimulus directly to people is a good thing? No, but I'd prefer stimulus to the people rather than stimulus to the banks. I would rather help out the little guy than the big guy, there's no doubt about it. But we need to first acknowledge what's actually happening. And is there a need for more stimulus? Look at where interest rates are. That's massive stimulus. People can borrow money all day, left, right, and center, and it's basically free. That's major stimulus. You're looking at this unprecedented level of stock buybacks and everything that have been supporting these markets all along. You are seeing so many things on all different levels. You need to be awake and aware of what's actually happening. No more stimulus is needed. I wanted to finish with this really quickly. Norway risks sinking into a recession for the first time since the financial crisis after a collapse in oil prices added to the fallout that we've been seeing around the world with the big C. My friends in Norway, I know that you've been looking at all of the details. The economy obviously faring better than many of the European counterparts as well as the whole world. The interest rates actually were increasing. There wasn't too many central banks out there increasing. It is largely expected that they will cut interest rates at the next meeting, March 19th. So we'll see about that. I will try to add that to a video, of course. I'm interested to see what happens here. I'll give you any details as they come out. I'm going to end the video there. If you found that informative, hit that thumbs up button. You are supporting me when you do. You can find me on all platforms now. I am available everywhere, alternative and mainstream. Check me out at The Money GPS. If you want to learn about e-commerce for free, I created an entire e-course devoted to my subscribers, teaching you step by step. It's available at the AmazonGPS.com. If you want to learn about money fast and you like reading like me, then you can check out these two books. They have everything you need, top to bottom, A to Z. Check them out at the link in the description. If you want the audiobook instead, themoneygps.com. This video here is very important to take a look at. I highly recommend watching it if you haven't seen it already. Click on it and I will see you there.